conversations when we get to talk with experienced entrepreneurs in the real estate space. And Michelle has a very interesting story, and she's done a lot of interesting things. So we're going to dive into her success journey, and we'll also touch on some of the opportunities she had when it comes to the tax code and how the tax code is going to encourage some of the things she's done. It incentivizes entrepreneurs, and in particular, real estate entrepreneurs. So, Michelle, before I go any further, why don't you introduce yourself in 60 seconds or less?
Okay, sounds good. I'll give it my best. Well, first of all, thank you so much for having us and for having me and for the opportunity. I say us because, I am right now still co-hosting a podcast with my daughter. And so in any interview that I go out there, I talk about that legacy of wealth building and passing that on to the next generation. But just a brief introduction, I am an immigrant from Honduras into the U.S. I came here in 1995, graduated, took the corporate path. My husband, also an immigrant from Germany, we met here, took the exact same path. We found ourselves with jobs that were, high-paying jobs, but that we absolutely hated. Number one, because we had no time to do the things that we wanted to do. And we were just not fulfilled. And to be frank, our paychecks did not match the time and effort that we were putting into those jobs. But we couldn't let go of those jobs because our green cards and our working visa depended on those jobs. So we started looking for, a side hustle that we could do. And, my family back home has had some experience with commercial real estate. And so we explored that as an option, and we started looking at flipping houses. And we realized that was quickly over our heads. We didn't know anything about real estate. So we kind of stumbled into the tax deed and tax lien world. And that's how we basically realized that a lot of the properties that were coming up for tax sale were pieces of land. And so to bring that, story now, to today, I flipped over 5,000 pieces of land. We've been doing that since 2002. Since then, I have also been investing in single family homes, in large multifamily. We, manage a portfolio of about 1,000 units right now in the multifamily space. And along the way, I have learned, a thing or two about, taxes and the tax code and how to use alternative investing in real estate to, use depreciation in your benefit, in your favor, to offset some of your, income statement wealth, as you're building your balance sheet wealth. So yeah.
So the cool thing I like about land flipping here is you're not competing with typical residential folks.
No.
And what I also like here is that, just like you said, when you're doing renovations, there's so much opportunity for things to go wrong.
Yeah.
And we've heard, and we've discussed this with some of our other clients that do developing and flipping, is you have to really have a strong oversight and implement accountabilities and really focus on budgeting. And we've heard so many horror stories about contractors, not really doing what they say they were going to do and all those things. So,
and then you
buy and sell.
Yeah, you just mentioned pretty much a lot of the headaches that as a beginning investor that was, trying to start investing into real estate as a side hustle, all the obstacles that you have to deal with. We were traveling 100%, in our corporate jobs. And so remote investing into single family homes and trying to renovate them and having to deal with contractors and the headaches of, once you get that house and things that were unexpected that now needed, to be repaired and so on and so forth, plus the competition that we were facing as well. I mean, still today, when I go into a real estate investors association and people ask me, what do you do? And I say, I flip land. People look at me like, I have three heads, because that's not something that you hear a whole lot in the real estate space, yet has the exact same I would say, benefits in terms of cash injections, because our typical flip is anywhere between $15,000 and $20,000. And I'm spending a fraction of the cost that a house flipper is spending on direct marketing in trying to acquire a lead, a seller lead. Yeah. And so the competition is definitely, much, much less. And in the complexity of the whole operation, which allows you then, when you're dealing with something that is simple, that simplicity allows you to, simplify in order to multiply and to scale. And so our very first year, we did about 30 something flips, the second about 60, the third, it was 150. And after that, we started actually doing big land auctions where we were auctioning off, 150 to 200 parcels in one day. And it was the simplicity that allowed us to basically start creating, those big cash injections. I always say that land flipping has been for us our cash machine. Our cash machine that replaced our corporate jobs and that made us really income statement wealthy, because this illusion of passive income, can only start with active income. You need to have active income of some sort, whether it be your corporate job, whether, if you're a high paid professional like a doctor or a dentist or a lawyer or whatever, that you're either your W-2, and in our case, once we found land flipping became that cash machine engine that then allowed us to start looking at, allocating some of those profits that we were doing there into much more long-term type of investments that I didn't just have an inventory, for 60, 90 days in my balance sheet, but that I hold for much longer. Yeah. Another thing that was also interesting about land is that also at the beginning, we were able to create some of that passive income by selling our land using seller financing. And to this day, we use seller financing to sell our land, where I have a deal under contract that is worth $50,000. I have it under contract, with a seller for $8,000. I put it on the market and I get a buyer to give me a down payment of $10,000. And with those $10,000, I'm able to pay the seller their $8,000, pay for closing costs, and then still have the remaining, $40,000 balance as a note that gets paid to me in $500 installments for the next 5-10 years. And it has been a beautiful vehicle, to create some of that passive income, but passive income that when the note gets paid off also ends. That's why we started, allocating some of that stuff into single family, into multifamily, that you can hold indefinitely and sell whenever makes sense to sell, pretty much.
Yeah. So there's some interesting things here in the tax code with your situation. So you have what is called broker-dealer status. And what broker-dealer status is on these properties is when you buy that property where your business is in the business of buying and selling for profit, just like you would buy, you at a convenience store, you're buying the supplies and all of the retail items because you're going to sell them later at a profit, the drinks and the whatever items you're selling. So when you have broker-dealer status, you are going to be paying self-employment tax, but also even if you do an installment sale as you were doing, in typical scenarios, you still have to recognize 100% of the income in year one. In most instances, so if you're flipping a property and you sell it, you have broker-dealer status because you're in the business of buying and selling houses. Even if you own or finance, you pay taxes to recognize all that profit in year one. But there's an exception to the rule for undeveloped land lots. I saw your face. I think you're like, oh, where's this guy going? He might have missed something here. But no, we're aware. And so there's an exception, which is really nice, where if you are flipping undeveloped land lots, you only recognize the profits as received. So if you have a 50% profit margin and you only receive $10,000 of that $100,000 sale, you will recognize a $5,000 of profit. And this makes it a lot easier to sell owner finance because you don't have to pay taxes on the profits before the cash hits your account.
Yeah. And that was a complete game changer because, I remember when we actually started this, we both had our jobs. We thought, oh my gosh, this is interesting that a lot of the pieces of land that are coming to this tax auction, is actually the properties were land. And it was basically land that had already 4 or 5 years of, back taxes. And we're like, okay, what if we were to reach out to these people on year 1 or year 2 or year 3 so that we wouldn't have to have the competition of being at the doorstep, at the footsteps of the court, and have all these people competing, for this. And then you have to, if it's a tax deed state, well, you get, the property, but if it's a tax lien, you still need to foreclose on the lien and so on and so forth. And so what if we were to get to these people earlier? And so we started actually our very first 2 or 3 flips, were kind of like proof of concept, and we didn't even in our own name. We didn't even use an LLC. But when we did that very first flip, I'm like, oh my gosh, this actually could become something. And so with the proceeds of that, we looked for a CPA, to help us basically, to advise us on, the type of LLC that we would need in order to start. And so he actually started us with a very simple construct because probably we, like many people that he saw, back in the day, I think there's a statistic that 90% of all startups, small businesses fail, in year 1. And so he probably thought, these guys, let me put them up with this simple structure and we'll see if they fall into that statistic. And if not, I guess, they'll come back. And we actually came back 6 months later. We had outgrown, that structure that he had created for us. And we were now faced with the problem of, oh my gosh, this is actually working and it's happening. And we're going to be closing out the fiscal year and we're not going to have the cash to pay the taxes because we've only gotten a down payment and the remainder of the profits are coming over time. And that's when actually he impressed us with, going back into the tax code and figuring out and researching this exemption that you're talking about and that we were able to use. And to this day, I don't think this would be possible if that wouldn't exist. And so we therefore specialize in undeveloped land, 3 types of land: infill lot, path of growth, and recreational land that has not been developed. And that's where basically this loophole, works like a charm perfectly. I feel like I can, have the cake and eat it too. And you get the best of both worlds. And the only thing is that, eventually, like I said earlier, those notes, because you've become the bank at this point, those loans will be paid off. Your buyer of your piece of land will pay off that piece of land, and then that residual income or passive income is gone with it as well. So we could do that, for the remainder of that note if it was 5-10 years, but we wanted to start basically allocating some of those profits from our land, which at some point, our monthly payments were $70,000 per month. Now it's a little bit less, but in the high end, it's been $70,000 per month, every single month just for monthly payments. And so we had a time back in 2009 where we're about that amount, and Phoenix real estate was for sale, and we were able to buy houses for $40,000, $50,000 that used to be just 2 years prior $200,000. And so every single month, we could go and use the monthly payments, the cash flow from the monthly payments, and buy ourselves a house, repair it, and then the strategy there was, for long-term hold and use some of the depreciation, that the houses were giving us to offset some of the active income on the land flipping side. And then eventually, we're like, okay, we've been doing now this successfully, the land, the single family, let's start doing single families in other markets. And that's how we learned really and became really good at being remote operators. And then in 2016, we decided, well, why not look at 100 doors at a time instead of one door at a time. And that's when we started in multifamily. So, and then again, turbocharging the cash flow, using depreciation, which of course is being recaptured in the moment that you do sell the asset. So I want to mention that as well, because there's a lot of talk about, being able to use a cost aggregation study, to do accelerated depreciation, but you have to be also knowledgeable that when you do sell the asset, that part of that will be recaptured. So, and I'm sure you have had many other guests that, talk probably about the exact same, topic in more detail. But yeah, that's been my experience. But all in all three asset classes, we've been able to use, like I said, to fuel our income statement wealth and to fuel our balance sheet wealth, and always, being mindful of taxes and the benefits that we have had in each of those different three asset classes.
Right. So the income statement wealth is from the sale of the land, it's giving you profit.
Yeah.
And then when you invest your profit into the real estate, now the income statement is going to be negative because of the depreciation. So, and that's a good thing. We want to have a negative income statement for our real estate investing, but the balance sheet wealth comes from the equity growth, where you're improving the real estate, it's appreciating, and you're paying down the mortgage. And that's where we're growing our net wealth, our net worth here, which is not going to really translate into your bank account immediately, but certainly over time. So,
yeah,
and then
absolutely.
when we look at the tax strategy journey here, your CPA advised you properly. And I say, when you're starting off, really talk to an advisor who understands your situation, where you're headed. Because if you just say, oh yeah, this type of business needs an S corp, without understanding the profitability and situation of the client, you could be misadvising. Especially when you're starting off, we need enough profit to justify the S corporation structure. Now, this land flipping business is going to trigger FICA tax. That's a 15.3% tax, on which would be on your first roughly $165 this year. And you mitigate that with the S corporation. And then you also have your federal taxes on top of that. A lot of people forget there's your FICA tax and your federal tax. So you use the S corporation to reduce your FICA tax. And then you have your federal taxes, which isn't even impacted by your S corp. Well, you might do something, a pass-through entity tax selection that helps a little bit. But the big driver to reduce your federal taxes is the real estate investing, with the cost segregation studies and the depreciation, and that's how you can, especially with a 100% bonus depreciation. I'm sure you have had some very wonderful years of tax savings by combining S corporations and cost segregation studies.
Yeah, absolutely. We have gotten checks, from the stimulus checks, from the government because of that same scenario that you're just describing. And, I want to mention another thing that you reminded me as you were speaking, when we were starting with the land flipping, was that we did not just have the S corp, but when we came back 6 months later, we also set up a C corp as a marketing company, for the S corp, with a different year end, for taxes. And it allowed us to sometimes not necessarily avoid the tax, but defer it depending on cash flow, needs and operations of the company. We were able to sometimes, defer and pass some of the income, to the C corp, and then create expenses, on the C corp. That, since that C corp, the fiscal year end was for example, in June, until June, we could then, as of December 31st on the S corp, basically minimize our taxes for the moment and use that working capital, to keep on fueling our land flipping business. And then put the bulk of some of the expenses on the marketing side of selling the land on the C corp, and that C corp then, would have a much smaller tax liability, whenever that June of the next year would come around. And so that's timing with two different, LLCs and two different structures has always also been instrumental in helping us continue work our cash and our capital to the fullest as well. So that's another trick that I've learned, along the way as well.
Yeah, and then there are certain deductions you can take from the C Corp you can't take from your sole props or S Corps, like a medical expense reimbursement plan. So you have a lot of medical expenses. Now is an opportunity to write off more than just whatever exceeds 7.5% of your income, especially for some of our folks in high income brackets. So we have clients where we're evaluating entity carve-outs and multiple entities where it doesn't just serve for tax reduction, but also mitigates risk. So if you can silo out different activities into different LLCs, some LLCs might be passive and are treated differently for taxes, and some might even be something like an insurance company, which isn't even taxed when it receives the funds. So there's all different ways where you can be strategic and mitigate risk, asset protection, and save a lot of money on taxes, which is a lot of fun.
Yeah. And how we were able to, overcome this self-employment tax was a construct of a limited partner with our LLC as an S being the general partner, of that limited partnership. And so that's what we use. And I don't know if that's what you advise, your clients, but that's what we've also been able to use successfully, that construct. But in the beginning, when we started, it was just one LLC as an S Corp, because he probably thought this is going to be good enough. These guys might fall into the statistic of the 90% of the small businesses that failed, in year one. And it was amazing to come back and say, hey, look at what we've done, and not fall into that stat. And even to this day, we see so many of our students right now replicating that success and basically using the learnings of 20-something years, and using it, for their own benefit as well to create wealth, today, not just 20-something years ago, but right now. My daughter actually just flipped her first piece of land. She closed on it on April 16th. She has 3 more lots under contract right now. But that was a huge win for me, because we talk about income statement wealth and balance sheet wealth and about creating assets that, pass on to the next generation. But I think it's important to not just pass the assets, but more than anything, pass the know-how to the next generation. That's something that I'm really passionate about lately. Maybe it's because she's 16 years of age and she's an upcoming junior in high school. And so I feel like, oh my gosh, I have 2 years to, left with her to really pass on some of the knowledge, but more than the knowledge, more than the knowledge, the mindset, the entrepreneurial mindset, and the grit and the resilience that it takes to, to start from scratch, from zero. So that very first land flip, she put it under contract for 6. She sold it for $40,000 with seller financing. She got $15,000 down. She was able to pay the seller, pay her realtor. I had her hire a realtor because she was missing some of the calls while she was in school, from her potential buyers. So I'm like, Sophia, I could pick it up, but then it's mom doing the work. But if we hire together a realtor, the realtor can, vet those buyers and do a lot of the legwork for you, but it's going to cost you for, a percentage in commission. And she was okay with it. And in any case, she had net like almost $4,000 in her pocket, and now $500 for the next 8 years, coming for $516 coming in for the next 7 years. So she's super excited about that. And it's important for us to start, I think, thinking of not just wealth from the point of view of the financial assets that you pass. Wealth is much more than just that, and then in taxes, but the knowledge of how can I use different constructs, and also the values, of being all in, of taking bold action sometimes, talking to sellers and buyers, even though you have never been on the phone with an adult negotiating a deal before in your life, and so on and so forth. So passing on some of those values to her and skills, I would say high income skills that I think we don't think about when we talk about creating generational wealth and legacy, we always only think about either the real estate, the assets, the stock, the whatever, but we forget about these other things that actually were the ones that created the assets to begin with, So yeah, so that's what I have been all in on, like I said at the beginning of the podcast. And we actually started a podcast together where I would have the opportunity to have some structured time with her to explain some of these things. It's called Becoming Wealthy, and in the emphasis being on the becoming, which wealth and building wealth is I feel like a process of self-realization and actualization where, the better refined humans we become, the more money we make and the more value we create in the world as well for others. So
let's talk about that. Let's talk about some of the value we're building for others here. So you're coaching folks, you're raising capital. Tell me about some of the things you're doing now that are adding value to maybe passive investors and also current and future entrepreneurs.
Yeah. So like I said, one is that podcast where I'm trying to teach not just the next generation, but also the moms that are listening and tuning in as well. We have a nice, women in their 40s and 50s that have kids around that age as well that are interested in passing, some of this knowledge and values to their kids. We do have a coaching company as well. We coach people, we help you build, grow, and scale land flipping businesses. We have almost a team of 30 people on that team. And, that for me has been, my spiritual wealth, because once you can take care of your immediate family, your needs, your foreseeable needs, the next generation, you start looking at, well, how can I create a bigger impact? And that's kind of like how the coaching business started. And now some of those students that have been able to create quite a bit of, cash injections from the land flips started investing with us on the large multifamily. So that's some of the value that continues to kind of like, evolve and continue to grow, for our family of clients, because I always say that they're not just coaching clients anymore. At some point, when my money and your money goes together, to ensure that our families are in a better, space, 5, 10, 15 years from now, we've pulled our resources together and we've become families. So yeah, those are the ways in which we, try to make an impact. Recently, we just purchased a deal in Dallas, 96 units that we, purchased for about $9.5 million from a seller that had about $14 million in it. So we bought it at a steep discount with the possibility to, of course, raise rents without doing anything to the property. And if we start doing, when we start doing renovations to the property, we are actually able to not just catch up to market rents, but actually, actually increase those. So, I feel like we have been able to create a wonderful, I would say, ecosystem where we're able to help somebody create, active income. And then if they want, they can continue investing that active income with us into this large multifamily that has, a little bit of a longer term horizon than just a flip that can be done in 60 or 90 days, So, yeah.
Very cool. So, it sounds like you got a lot going on, and you certainly have taken some time to build all of these exciting projects out.
Oh, yeah. I mean, in total, across all 3 different companies, because we have the land flipping company, the single family, and the multifamily, we're a team of about 70 people. And so it's taken a while to not be part of the statistic of the 90% that fails. We've learned a lot of leadership lessons, along the way. on how to not just scale a business model, but actually scale a company and scale people, which require human connection, actually investment in their development, and so on and so forth, in order for us to now really enjoy the fruits of so many years of hard work. We just came back from a 2-month vacation in Europe. I mentioned earlier that my husband's originally from Germany. He was actually gone for 3 months because he spent the first month actually doing a pilgrimage called the Camino de Santiago through northern Spain. And then Sophia and I joined him for 2 months, and we traveled through Greece, France, England, Turkey, of course, Germany, Ireland, and we just got back last Sunday as of this recording, this past Sunday right now. So, and things continued happening because of those leaders, in each of those companies now, that are kind of like the heads to the horses. And our investors continue seeing, amazing results. Distributions are getting paid when they're due. Our coaching students are getting the coaching that they need in order to stay successful. And our portfolio of single families, well, it continues producing cash flow, whether we're here or not. And that's, I think, the whole kind of like the holy grail of investing in real estate and in real assets when you start, is to create, such an operation that is not entirely passive. That in order for it to be passive, we had to get team in place, the right people, so that we could be much more passive about it. But it's not entirely passive. And I know that you probably have spoken about that, that illusion, that many people talk about in prior episodes of your podcast. But yeah, it's definitely more passive than having, a high stressful corporate job, for sure. So
absolutely. Everything is hard. Having an easy job is hard because then you got to live on little money, and it's hard,
Yeah.
So what I think the hardest thing to do is not to do something that you find enjoyable and fulfilling and has opportunities in it. And so I got 2 things I want to hear from you before we head out. And I'm having issues with my computer, so we're going to have to wrap it up in about 2 minutes because I got to fix something with my power. But can you tell us first, what is one thing that separated you from other people in pursuit of success? What is something special about you here? And the second thing I want to know is, how can people connect with you and learn more about what you do and maybe follow in your path of doing 8 figures of business and having a 9-figure portfolio and doing 7 figures of profits in land flipping?
Yeah.
How can we do all this?
Yeah, I think one thing that was in our favor was the fact that we were both immigrants trying to build a future that was bigger and better than the past that we were leaving behind. And with that came also us having or seeing opportunities much from a different standpoint. Yeah. And like, for example, dirt, who could have thought that dirt could create what we have been able to build, for our family and for the families of others. And then I would say zero fear of hard work would be another, of going all in on something and just giving it your best. I don't think that anything that I have done where I have gone in half-hearted has really truly worked. So that's something that I think I try to even instill in my daughter now, is this all-in mentality that once you commit to something, you go in, you muster the courage to do it, you're going to gain the capabilities. And as a result, you're going to gain incredible confidence once you see the results of your, of going in, of going all in. And another thing, I think the last thing I would say is creating win-wins for everyone involved. Is basically, I am a big firm believer that the world or the universe doesn't give you what you want. It gives you more of who you are. And so if you're a person that acts with integrity, that is always looking to create win-wins for everyone involved, that ripple effect is an important way to not just thrive, not just survive, but to thrive in business. And it has not stirred us wrong in over 20 something years, of entrepreneurial journey. It's always paid off. And if you want to learn more about some of these values that I'm teaching my daughter and her journey of land flipping, our goal together with this podcast is over the course of the next 5 years. We started with her being 15 last year. Is over the course of the next 5 years, by the age of 21, that she basically has a 7-figure net worth. And so we are basically talking about all the obstacles that she's, facing in her little land flipping business, or the things that she's learning when she goes out with us and visits, some of our multifamily properties, or the things that she learns from mom and dad when we're raising funds and raising money, which was actually incredibly helpful for her. She was part of a nonprofit, and she was able to raise like $200,000 just from some of the skill sets, that she's learned from seeing and watching us fundraise as well. And so if you want to join us, the name of the podcast is Becoming Wealthy. You can go to becomingwealthy.com. You can learn more about me at michellebosch.com as well. And if you're interested in land flipping, our next, masterclass is coming up, and you can go to landprofitmaster.com and learn more about it. So that's how people can connect. And I would love to, have you, if you're watching or listening to this, come into our world of dirt riches, I would say. Yeah.
Wonderful words. You truly have a wonderful story and a great story. I love how you're passing your wisdom off to your daughter, which is fantastic. Not only the incentives and tax benefits, yeah. but more importantly here, there's a wonderful benefit to not only giving the next generation money, but abilities, which are far more valuable than the money. Michelle, thank you so much for being our guest. I'll put the address and the site and anything you need if you're listening in the car. And I hope you guys really enjoy this. And of course, if you want to learn more about what I do and tax planning opportunities, go to markperlbergcpa.com, or as of August 1st, prosperlcpa.com, prosperlcpa.com.